Welcome, welcome. Godric here, your stock market mentor. It is Friday, August 16th, 2024. We have a special session tonight. I will be here Monday. I'm not going to change Mondays, but I'm going to do an extra session right now with you guys. Welcome, welcome. I'm going to talk about some stock market stocks tonight. Okay, so something I remember about the stock market when I was younger. When I just missed, I narrowly missed the crash of '87, and I remember hearing about it. Like it was when I heard it happened so fast, and it didn't recover right away. So a lot of businesses went out of business. A lot of stock market companies, traders, brokers went out of business, and that's what I remember. And the Dow Jones was around 5,500 back then, and then it dropped to about 3,300, if I remember correctly. So it was quite a dip. It was a real fast correction, and it didn't recover right away. And it was like, it's a stock market crash. It's like it'd been normal to us now, but looking back, that might have been the worst crash since the Great Depression, because people weren't ready for it, even the professionals. Welcome, guys. DJ, welcome. Christopher Stokes, welcome. Scott this on, welcome. Omnipavid, welcome. Viewer, Uncle Tommy, CMT, welcome. Godric here, your stock market mentor, doing a special session tonight for stocks on Friday, August 16th, 2024. I want to show you a few things I learned. Also, take your questions. Just bear with me. We're going to go for about half an hour, probably about 45 minutes tonight, maybe an hour tops. Give me some likes, guys. Put some likes up there. Tap that screen for me. Get some people in here for me. And if you can, do 2 shares. There's a share, little arrow in the corner there. Just share with like 2 people. You help me get some people in here for tonight, Friday night. Talk about stocks. I got your back. Honda, welcome. OCG guy, welcome. Hunter, Riley. All right, so that was a more major crash than the 2008. There is another crash in 2001 with the towers, the twin towers. That one wasn't so bad, but I remember it was pretty deliberate. So I remember, okay, so 87, 2001, and then 2008. 2008 was kind of bad because the banks were failing, so the government had to bail the banks out. So I think the banks should just let them fail, because why placate? It's like, are they going to bail you out of your mortgage if you can't pay your mortgage? Which makes me think, you guys might want to look at bank stocks, Goldman, BlackRock, JP Morgan, Citibank. Because apparently the government won't let them fail. So how do you really lose? Welcome, guys. I'm going to take your questions a little bit, but I want you guys to have some questions for me tonight. Username. Why it looks so familiar? User. I've been told my whole life. I look like Uncle Jack, like my friend, like you remind me of somebody. I think it's my my spiritual persona. Thanks for the follows. If you guys follow me, I will follow you back after the live. Hit that. Just click on the screen and give me some likes. Give me some hearts. Help me get some people in here, guys. Appreciate you. We got 14 people in here now, 17. And if you hit the share button in the corner, we can get some more people in here tonight. I want to get like at least 100, 100 steady, 100, 150. What's my record? I don't know. And you know what? There's a crane for my goal. I have a couple cranes in here. If you guys want to support me, drop me a couple cranes. Appreciate that. Won't say no. I'm motivated by cranes and I'm motivated by subs. Okay, so anyways, what do you think about Costco stock? Tony, what do you think about Costco stock? Costco is great. For Costco investors, I just wish you got in, back when it was cheap. It's like over 800 now. Let me pull it up here. Costco, COST. 869. When it broke 800, I made a little talk about it, and now it's 869. So I guess it's an all-time high. If you look at the 5 years on Costco, it was 260 5 years ago. So it's about to triple. It's tripled actually already in 5 years. So good stocks will triple in 5 years or double. And that's how you know you got a good stock. Put the 5-year chart up and see if it's tripled. That's massive share growth, and that's excellent return. You know that the investors are happy because they got paid. Costco Wholesale Corporation, together with its subsidiaries, engages in operation of membership warehouses in the United States, Puerto Rico, Canada, Mexico, Japan, and United Kingdom, Korea, Australia, Taiwan, China, Spain, France, Iceland, New Zealand, and Sweden. Didn't know they were like that global. Awesome. So like Costco's like membership is like $50 out here, $60. So they get that every year, and then plus they're gonna make you load your cart when you go in there. Like you can't spend less than $300 when you go to Costco. It's just not possible. You get those. Everything's in bulk at Costco. Yeah. So this is going up. Let me see if they have a dividend, very tiny dividend, 0.52. So you get like a few cents on that. Market cap for Costco, market cap's important, 389 billion. So that's big enough to withstand another economic downturn. PE has a PE 54, has a high PE, so maybe it'll cool off, but right now it's going up. It's just going straight up. When I look at a stock, I look at the volume per day. And Costco has a volume of 1.5 million. That's below average. So it's probably 2 million a day. But look at the share price, not 869 for one share. So based on the high share price, that volume is great. Okay, write that down. You want a volume. You want a 5-year chart that goes up over time, that makes money. If your stock in 5 years was higher 5 years ago and it's lower today, that's the wrong way. That went the wrong way. PE. If it shows a PE, it shows profits. Profits are good. If there's no PE, if there's a dash or a negative, that means they're losing money. So that's a red flag. Daily volume, 5-year chart, PE. Share price. Share price should be nice and high. $800 share price is great. Why? Because a high share price means stock has gone up and up, and it's gone up and over time, and it's performed. If you have like a $5 stock, $10 stock, where has it gone? It hasn't gone anywhere. So that stock is not made people money. So that's how you know. That's the difference. Look at the big stocks. Amazon, Microsoft, Apple, Nvidia. $100, $200. Microsoft is $400. So high share price is much better. Think about like gold costs more than lead. The expensive stocks are better. Is that good? Questions? I'm gonna follow everybody back after the live. Appreciate you. Give me some more likes. Hit the screen. Just tap. Just tap to get more people in here. Tap. Give me some hearts. All right. I'm 18, trying to retire at 20. Quick, what's my plan for next week? Mango, what's up, Mango? You came to Godric for your first stock market trade? Well, you can retire. This new generation, I guess Gen Z, you guys can retire because you're, I think, honestly, business minded. Some of you are. And a lot of you guys aren't trying to work 40 hours for 40 years, which, I mean, I can't be mad at you. So you're doing some side hustles, business, and a lot of you guys are investing in the stock market, so that's good. But if you're 18, out of my account at Schwab, don't do Robinhood. You'll thank me later. Schwab has 24-hour customer service, 24-hour access to brokers and stock and your account. And they have all the bells and whistles. They have the TG platform, Thinkorswim. So you're going to get all the stuff you need. Now, stock trading is free, but option trading is about 90 cents per contract. So that's pretty good. Pick some stuff, like put your whole paycheck in there, okay? Whatever money you have. Put in your stock market account. If you get check writing, you can pay your bills with checks. You get check writing. That way you can put all your money in there. Use like a savings account, checking account, okay? And then start buying some shares. Like, just get some stocks you can get behind. Like, you like the company, you can access the product. Like Costco, you can go to Costco in any of these countries, and in other words, you can use the product easily. That's important. And start building up your account over time. And you'll see that your account grow because you have good stocks and they're going up, right? And you're putting deposits constantly, every time you get paid, every time you get birthday money, every time you get a tax refund, you're putting money in your account, you're building your account up all the time. And over time, you're going to see your account grow, and you will pick some lemons. New people will pick some lemons, and the lemons go down. Okay, so just be prepared for that. Some of the stocks you pick, you'll find out were crap. But you wipe off your wounds, you get better, at picking, and you'll learn from your mistakes, and you'll learn what a good stock is, and why not to buy stocks that, let's say, have no PE, have no volume. You'll learn to stay away from penny stocks. You'll learn this as you go. And ideally, your account will go up over time exponentially. And if you start doing like cover calls, dividends, you can eventually retire in the stock market. I won't say maybe by 20, but maybe 25, 30. Depending on you. All right. Thank you, guys. Tap that screen for me. I need some more likes. Give me a few shares. All right. You bull for next week? Yes. I think we're going to go up next week. We're going to probably go up until September, until they probably cut. And then we'll see another boost, and then we'll probably cool off in September. Mid-September, late September. And then by October, November, we'll be back up. So I think. And we'll be at new highs by Christmas, New Year's, be new highs. Thank you for the follow. I'm going to follow everybody back after the live. And if you guys want to drop me support me. I come every Monday night. We're going to talk about stocks. I come also randomly throughout the week, like tonight. I'm here answering your questions. I answer subs first. If you want to sub, it's only like $5 a month. It motivates me to get in here more often and answer questions. And also, you guys can drop me a DM if you have a question want me to look at your stock for you. If you have a question about a trade, I got to all my DMs. Just one question at a time. Don't blow it up. Just one at a time. Wait till I get back to you. It'll take a minute, but I'll get to you. Palantir. David, what's my thoughts on Palantir? Palantir is a great stock. Palantir is like my new Twitter. Before Elon Musk bought Twitter, I was trading Twitter. I did, I want to say 71 cover calls on Twitter before they got bought up. And the point of that, to say that, is that like I did so many cover calls that like the premium, added all that premium up, and it paid for the purchase of the stock. So even though the stock went to zero, I would have still made great money because all those premiums over time building up have given me a great profit. So Palantir is like the new Twitter for me. PLTR. A couple things about Palantir I don't like that much. Like one is the share price is pretty low, which is a good thing as far as it's cheaper. But as far as being a low share price, it's not quality like an Apple, like an Nvidia. But they have the great volume, 64 million volume. Palantir Technology incorporate builds and deploys software platforms for the intelligence community to assist in counterterrorism investigations and operations in the United States, the United Kingdom, internationally. So they're going to rely on government contracts. So unfortunately, we can't buy Palantir ourselves. I don't think. You have to have, a lot of money to do counterterrorism. So that is not a good thing. They don't get the check mark there. But let's do the 5-year chart. Here's an example. See, here's why I say it's like Twitter. The 5-year chart is up and down. It was a little bit higher 5 years ago. Anywhere between 17 to 30, 35. Back during COVID, it went down between 22 and 23. 2022 and 2023, it was down to about $8. And it came back up to what it is today, about $30. Long term, I think it'll be fine, but like ideally for Palantir, you're doing cover calls. It's just the greatest trade ever. Because why? Because people are betting on this company probably because of the government contracts. But here's what a cover call looks like, if you guys don't know. $32 a share. So you buy 100 shares. That's $3,200, right? Then you look at the options. So we're going to go 1 month out. So it's August 16th. So we're going to go to September. So you got options. And you go to all strikes, all days. We're going to go out 1 month because you can write the cover call every month, for example. We're going to go out to, let's go to the 20th of September. So 34 days, close enough. And then we're going to write the cover call at a higher than the stock price. So we paid 32 for it. We're going to go, let's say the 34. Pays 123 by 125. That gives us 2 points of share growth. Yeah, 3202. We can also do the 33, gives us a point of share growth, pays 160. I'm going to do that just because that gives us more premium. So let's do the math. If we buy 100 shares, write the cover call for next month, 34 days out. The 33 strike. Okay, that's a whole $1 higher than we bought it at, right? We get paid 160 by 162. Okay, which means $1.60 per share, or $160 for 100 shares. So what I'm showing you, and you guys who are 18 who want to retire by 20, this is one of your keys to retire. Cover calls. Because you can make money monthly on these shares, on your stock. So if you're getting 160, you go math, okay, 160 per share divided by the share price, 32.02. Return on investment, 4.996% return. Let's just say 5% return. 5% return on Palantir every month. And so what you're doing, you're getting $3,000, $3,200. You're getting back $160 every month on the cover call, and that's your business. And $160 what? Pay for Netflix stream, some Starbucks, maybe some gas. But if you have 2 contracts, that's $320. 3 contracts, $480. So you understand. So anyways, 5% return a month is like 50% return a year. 60% return a year. You do it for 12 months. And you might have less return because of what? The stock can come down some. So maybe your 50% return will be 30% return. I'll still congratulate you. But if you have, if you build up your account $100,000, 500 grand, $1 million. 30% return is 300 grand on $1 million. On 100,000 is 30 grand. That's like, that'll supplement your income at your job, even at 100 grand. So that's what we're looking at. We're looking at a great stock like PLTR that gives a great return. Wait, let me say that a different way. PLTR is not a great stock. It's more like an average stock, but it gives a great return on a cover call. Okay. So you're getting a high return on a cover call with a decent stock, and you can do that continually, month to month. You're good. That's what I want to say. Thank you for the follow. I'm gonna follow everybody back after the live. You guys can tap this screen. Thank you for the likes. Let's get one more K likes. One more K. Come on, hit that screen until it explodes. Pop, pop, pop. Come on now. And if you can, give me some shares. Maybe like 2 shares each. Appreciate you. Help me get some people in here. I'm gonna give you my top 10 stocks today. My core 10 stocks list. And this is gonna be the value of tonight. Just these stocks right here, which I think are golden. You'll be good. So get your journals out, write them down, okay? How many Apple shares you have? I got Apple. I like Apple. I do cover call Apple. Let's do Apple. Apple's always been good. Ever since Bill Gates bought them, supported them, they were going out of business. And Bill Gates made software for them and basically saved their ass. And ever since then, it was good. I think Steve Jobs was like a visionary. He wasn't great at managing his stock on the stock market, but his product spoke for itself, and that's why he was good. That's why Apple, I think, is good. Apple Incorporated designs, manufactures, and markets smartphones, no doubt, personal computers, tablets, wearables, and accessories. Oh, what about the watch? Yeah, the wearables. Smartphones, Mac, a line of personal computers, iPad, line of multi-purpose tablets, iWatch, Beats products, HomePod, clouds, Apple support and cloud services. That's big right now. That's growing, the cloud. Okay, $2.20 per share. So not cheap, but like I said, the better stocks are higher because they went up and up. And they performed themselves. They proved themselves. Look, look at the 5-year chart. You can see that Apple 5 years ago was only $50, and now it's $220. So 4 times your money. 18-year-old guy wants to retire by 20. Apple in 5 years, 4 times your money. Went from 50 to 400. So I'm telling you, write these stocks down. We could do the cover call for Apple, but I'm not going to worry. I know it pays around 3% a month. But look, also, they have a tiny dividend, 0.44%, tiny dividend, better than nothing. PE, Apple PE is 34, so that's good. Market cap, $3 trillion. Nice and fat. What else? You can buy the product easy. So, think about 5 criteria. Volume. Oh, look at the volume per day. Apple volume is 44 million today. Why is volume great? Because you have a lot of volume. That indicates a lot of investors, a lot of traders in the stock. They're going to do what? That when the stock dips, they're going to come in and swoop in and buy that stock at the low price. What? That's going to bring the price right back up and save your ass. That's why it's better to have high volume. You guys in these penny stocks that have a low volume, you get stuck in that stock, it goes down. Be stuck in that stock for 9 months. You just kiss it goodbye. All right, so share price, a healthy share price, 200, that's great. Check mark. Volume, over 2 million a day, check mark. PE, has a PE, Apple has 34, check mark. 5-year chart goes up nicely, double, triple, quadruple, check mark. And you can access the product, you can buy the product easily. Number 5, check mark. So that's 5 criteria right there to pick a good stock, right there. Apple has all 5 pounds here. It doesn't have that. Doesn't have the share price. Doesn't have the by the product. So it has three of the 5 check marks. That's the difference. But the 5th check mark would be a nice cover call. Apple has a nice cover call. I'll just show you because why not? AAPL, go out 34 days to do a cover call for next month. And if we buy stock here at 226, I'm already going to tell you we're going to sell at 230. I already know that. September 20th, 34 days, sell the 220 for 1045 by 1060. Can we say 1050? 1050? Because if you have a bid ask, 1045 at 1060, why not just put a limit order for 1050 and just wait a minute? And because there's a heavy volume, someone's going to pick up your order. So 1050, let's do the calculation. Let's do the return on investment, okay? 10.5 premium on the cover call every month, divided by share price 226. Let's put in the cents in there. 226, even. Oh, look at that, even, equals 4.6% return. Wow. Apple was like 3% last time I checked. We're getting that much per month? Dang. Wait a minute, is that right? Apple's great. Even as big as it is, as fat as it is, as steady, as safe as people think it is, it still pays a great amount for the cover call every month, which is the options. The options are hot. All right. Sound good? How many Apple shares you have? I'm going to take a few questions. And then before we wrap, I'm going to give you my top 10 stocks. Then we can wrap. Okay? That's on Starbucks. Starbucks is great. Cevito. Starbucks is great. As you know, it went up 15 points this week on Monday. Why? Because this is weird. Starbucks is getting Chipotle's CEO. What? That's just blind luck. Like, CEOs, some of them are really hot, I guess. I guess it's bad for Chipotle and good for Starbucks. But Chipotle went down and Starbucks went up, and then Chipotle corrected, so Chipotle's coming back up slowly. But sometimes, like, just for you to get a new CEO, it's gonna blow your stock up. Why not? Let's pull it up here. Let's look at Starbucks. I'm gonna tell you why it's good. And by the way, Starbucks is one of my top 10 stocks. So just so you know, so is Apple. SBUX. $94.94. Look at that. Company profile. Starbucks Corporation, together with its subsidiaries, operates as a roaster, marketeer, and retailer of whole coffee beans worldwide. Coffee products. The company operates through 3 segments: North America, International, and Channel Development. Its stores offer coffee and tea beverages. That's true, they have tea. Roasted whole beans and ground coffees, single serve products, ready-to-drink beverages, and various food products, such as pastries, breakfast. That's true, you can eat breakfast over there. They got the whole thing. You just hang out there, turn your Wi-Fi on, get your Starbucks. You're good. It's almost like a hangout joint, Starbucks. They made it a whole, culture, you know what I mean? So, market cap, 107 billion, so they're not small anymore, they're big. Look at this. You guys are gonna love this. Dividend. Starbucks dividend, 2.4%. It was paying 3% when it went down to $70 a share, but now that's $90 a share. The dividend is 2.4%. So it's official dividend stock, 2.4% dividend. The PE is 26. So what? It'll probably break 100 from here. Starbucks probably break 100. And Apple, I think Apple will go to 240. If you ask about Apple, Starbucks will break 100 pretty easy. Has a nice PE, market cap, has the volume. What's the volume per day in Starbucks? Volume is 16 million. So it has the, oh, let's look at the 5-year chart. I know it's good. You don't got to worry. But 5-year chart goes from the bottom left to the top right. Oh, wait a minute. No. Starbucks was $93 5 years ago. So I'm going to say no on the chart. So it's going to have 4 checks out of 5. The chart basically goes from 93 to 60 to 125 in 2021, back down to 80 in May 2022, back up to 108 in 23, and then down to 70, and then back up to 94 today. So it basically has peaks and valleys. It's like a mountain here for Starbucks. So even though it did maintain the price, which is great, well, hang on. I got to give it credit for being a dividend stock. Because it's a dividend stock, we don't expect a great return on Starbucks. We expect it just to maintain its price. But see, even though it's maintained its price, we still want to have some share growth, which we didn't get in 5 years. So I'm going to say it doesn't get the check. It does not get the check for the 5-year chart. But it has PE, has volume, it has easily access to the product, and it has a good share price. So it gets 4 out of 5. And it'll break $100. Sound good? Appreciate you guys. Give me some likes. Give me some more likes. Let's get those likes to 2,000 for me. And if you want to support my channel, give me a sub. It's only $5 a month. And drop me a couple of cranes. Drop me a couple of cranes so I'm helping you out. I lost 25K. Gamaro. Jessica, you lost 25K in what? In what, bro? Talk to me. Let me help you. CrowdStrike. I didn't really follow CrowdStrike that much until that big thing happened. I don't know. Let me pull CrowdStrike. What's the symbol? CRWD. CrowdStrike Holdings. 262 share price. So just so you guys know that they got blasted for that security breach. It went from 385 to 222, and now it's 260. So it lost. It got a haircut, you know. Let me look at the 5-year. 5 years good. It goes from 90 to 260. So about 4 times. Can't complain. CrowdStrike Holdings Incorporated provides cybersecurity solutions in the United States and internationally. Its unified platform offers CrowdStrike delivered protection and endpoints, cloud workloads, identity, and data. The company offers corporate endpoint and cloud work security. They do internet security, cloud security, managed security, and vulnerability management. There's another stock, Checkpoint Software. Let me see if they're in the same league as CrowdStrike. Maybe not. They don't show it here. Market cap 63 billion. Oh, hang on. CrowdStrike is still small. 63 billion. I like to have a market cap of over 50 billion, and that's because over 50 billion is getting to the point where it's not small, and it's ideally growing. It's going up in market cap, but 63 is nice because it's kind of crossed that threshold, and it's kind of big enough to survive like a correction. You know, it's kind of big. It's not so small that it can get stepped on by anybody. So it has a market cap that it can really grow. So maybe there's a lot of potential upside. Look at the chart. I can't tell that much from the chart, but their support around their support here about 260. So I would say CrowdStrike will not go down. Mark my words. It'll go up because people are just buying it right here. Hopefully it won't have another issue, and it'll be good. So it's going to go back up to the all-time high. Looks like it was 390. So I'll probably break 400 by next year. Let me look at the cover call. Why not? Cover call crash, right? Let's go out 34 days to September 20th. Buy the shares here at 262. That's 26 grand. You guys got 26 grand? We're going to write the cover call for... Oh, it doesn't pay enough for cover call. Interesting. 262. Oh, no, it does. It does. Sorry. I'm in the wrong month. All right, 262. I'm going to sell the 270, 280, 22. I would sell, if I had 200 shares, I'd sell 270 and 280. But let's just do the 270 because it pays more. And 280 doesn't pay as much. But look at this. The options are hot because you can buy the shares here at 262, which is 26 grand. And you can buy the cover call for the 270, which means we agree to sell the shares at 270 or higher next month, which is 8 points higher. So there's 8 points of share growth right there. And we're going to get paid for that $15.25 by $15.50. So $15 a share per share, or $1,500 per 100 shares on the cover call. And let's do the ROI. 15.25 income premium divided by the share price of 262.44. Do this with me. Write this in your journals. 5.8% return. Great cover call. Wow. Great cover call. 5.8% return. So per month, 5.8% return. Per year, 58% return. Do it 10 times. Why not? I don't think you can buy their product. I haven't looked into it, but I'm going to just say you probably need to be a corporation to afford their product. I'm just saying. I don't know if it's not a McAfee. You know what I mean? Share price is nice and high. I know they have PE. They have 3.5 million volume. They got that. I won't give them the item easy. So that's 4 out of 5. That's 4 out of 5. They got the PE. They got and they got a cover call. They got a 5-year chart. Went up 4 times. So $1,500 a month could pay for your rent or your mortgage. So if you have 26K, you're going to bring in $1,525 a month on your CrowdStrike shares, every 100 shares, and that's your business. That's why cover call is good. It's hard to beat that trade, man, every month. And that's also allowed for some share growth. Sound good? Appreciate you guys. I'm going to start wrapping up. I'm going to give you my top 10 stocks, my core 10 stocks list. Feel free to ask some questions if I get to your question. Be patient. If I don't get to your question, just DM me, and I will get back to you. ETFs. OHA 2683 ETFs. I like Triple Q's ETF, QQQ. And that's because it's been going up nicely. And that indicates the top 100 NASDAQ stocks, which are mostly tech, QQQ. And that right now is 474 a share. I also like to SPY, SPY. And the SPYs are 553. When I checked earlier, it was 555. So those two I like, the SPYs and the Qs. And the SPYs, of course, represent the top 500 companies, which is basically the whole market, the top brass of stocks. And that's more predictable than the Qs, because the Qs are more tech, so more volatile than the SPY. And you can look at some call options on either the SPY or the QQQs, like for maybe like next year, let's say for January, make a few bucks. Like if you buy out of the money, let's do the QQQ. Okay, I'm gonna give you option trade. QQQ go options, go to January, which is what? 5 months, 8, 9, 10, 11, 12, 1. 5 months. You want time for your option to mature, to go up. And let's see, let's say the 500 is, oh, it's not right. Yeah, let me get to the right month. What do you think the 500 call is going to be for next year, for January 2025? That's the one you want, right there at the 100. You got the most volume. 153 days. January 17, 2025. 500 calls going to be $15, $15.88. So you can spend $1,500. Hey, look, buy CrowdStrike, get 26K. Do the cover call, get $1,500, and the call option for Triple Q for January 500 strike. It's $1,588 right there. I just pay for your call option right there. And what that call option is going to give you some nice delta. And when the Qs go to 500, which they probably will, this $15 call option will probably be 20, 22. And then you start just, what I say, when you get a profit on the call option, pull the trigger. That's what I do. All right, DSTC, welcome. Leo Palinit, welcome. Explain cover calls to me on mic 5. Leo Palinit, explain cover calls to me on mic 5. I'm going to do that. Get your journal. Write this down, all right? I'm your stock market mentor. Check it out. Cover calls probably arguably the best trade in the stock market. Why? Because it's like you're the house in the casino. You're getting money regardless. You take 100 shares of a stock. As long as they have an option chain, most stocks do. Not all. But these are what I'm talking about. CrowdStrike, PLTR, Starbucks, Apple. All these stocks have option chains. You're agreeing to not buy a call, not buy a put or call, which normally option traders do. You're selling the call. You own the shares. You create the call by selling your call from your shares. So it's called a cover call. And basically you're selling the option to the market and you get paid money. And what I tell you, every month, do it every month, month to month to month to month. And what? You're going to get an income every month and every year for your shares. You can do it for Palantir, you get 5%. For CrowdStrike, get 5.8%. Apple pays 4.6%. I already went through this. I'm going to put this video on my YouTube, so check out my bio, and also my TikTok. So come back and check it out. You can catch whatever you missed. So your business is you're holding shares and you're renting your option out to the public for money. It's not unlike if you're an apartment owner. Let's say you have 10 units, okay? You rent those, you own the apartment. You rent those units out to the public for monthly income. Same thing with a cover calls. You own the shares. And for every contract you sell or write, call it write, minus a one means sell one. Write one every month. So like if you have 10 apartment units, it's like having 10 contracts of a stock that you write a cover call. And you're going to get a percentage return. In this case, around option market's hot right now. So around these stocks are paying around 5%. I'm not gonna lie to you, a month. But even if you got 3%, it's great because what? It's good income. Do it 10 times. I always say write a cover call 10 times a year. Try to do it monthly, 10 times a year. That's going to bring you 10 cover calls. And if it's 5% return, that's 50% return a year. If it's 3% return, it's 30% return a year. So the mechanics of the cover call go like this: you own the shares and you agree to sell the stock. In this case, at a higher price. I'm telling you how to do it. We did this I just explained it with CrowdStrike. Let me do it again with Palantir because Palantir is easier. Palantir is $32 a share, so it's nice and cheap. That's a good thing as far as you can get into the cover call for 33 grand, right? So we're going to go up 1 month. So if it's August, you go to September. If it's September, you go to October, okay? And you click on options, and you're going to go to, in this case, 34 days out, which is September 20th, okay? Because it's August 16th. You can do the 13th, but it won't pay as much. Just like you do a little bit longer. Ideally, you want to do a cover call for 3 weeks to 7 weeks out. That just works the best. A lot of reasons for that. Just take it from me. If you do 10 cover calls a year on one stock, you're doing great. Consistent money. And let's do Palantir for you again. Repeat myself. So buy for 32.02 here at the market, and we're going to write the 33 cover call. Because why? So we're going to sell $1 more, which means we're going to get another $100 of share growth. But once you hit 33 and above, if it does go that high, we give away the upside. That's the downside. When you do a cover call, we're going to get a premium every month, but we give away the upside. The stock goes higher than the strike we write. In this case, we're at the 33. We're going to get paid $1.60. Remember? So the business is you get $160 every time you do your cover call on Palantir, which is a $3,200 investment. $32 a share times 100 shares. Do the math. We did the math. It was 5% return, okay, every month. All right, and 160 income in your account, so it'll be deposited right in your account. And just wait till expiration. Don't get fancy. And once it expires, you can do it again every month. A couple things. If Palantir goes to 40 or 50, which probably it won't do that, but if it does do that, those option buyers are going to get mad money because they bought your option for $1.60, right? And their option went to 5 to 10 to $20, you see. But you're going to get only the 160 and maybe some share growth. In this case, it goes to 33. So that's kind of the downside. You miss some opportunity, you know. But if you're going to get consistent money monthly, that's the exchange. You just pick what you want. You can't have your cake and eat it too. You know, I would say Palantir, honestly, it may not go that high because it's a heavily traded stock, you know, and people are all over those options like crazy. So I just want to just write those options, you know, because there's a market for it. That's an example of the cover call. So whatever shares you have, pull up the option chain, go 1 month out every time. Write a strike higher, sell a strike higher than the share price. That way you get more money if it goes up, not less. And that way, you're good. And do it on a good stock too. Palantir has 4 out of the 5 criteria, so it's pretty decent. I already went over it. There you go. Any final questions before I give you my top 10 stocks? Is it possible to make 5% per month on cover calls? Why don't more people do it? Leo Palanik. If it's possible to make 5% per month on cover calls, why don't more people do it? Okay, a lot of reasons. One, they don't know how to. Like, did you know about cover calls in high school? No? College? No? Why not? What? You better talk to your teacher. They didn't teach you how to be financially independent in school? Why not? Because they want you to be, what, a worker bee for 40 years and pay taxes for 45, 50 years and then work at Walmart when you're 60, 70? Is that why? Is that your master game plan? There's also a downside with cover calls or with just owning stock. Is if the stock comes down, you're going to lose share growth. Or you're going to lose share value, you know? So that's always a risk, you know. However, let your stock come down a little bit. Just write the next cover call. Always write your cover calls. And if the stock is down and you're getting cover call money, you're climbing your way out of that hole, you see? So you're going to get money regardless. That's what I tell you. So in that way, it's good. You can always make the money. You just have to write the lower cover call if your stock goes down. Like if you own an apartment complex and your apartment's valued at $1 million, and the market comes down, so now the value of real estate is coming down. So now your now your $1 million apartment goes to $800,000. $800,000. You lost 20% of your. You lost 20% of your investment. But so what? Because we can still rent our apartments, even if the value has gone down. You see, same thing with cover calls. Even if you lose money in your stock shares, you still write the cover calls monthly. Keep that in mind. Okay. Now, thank you guys for supporting. Appreciate you. Thank you for the likes. Thank you for the follows. Here's my top 10 stocks list. I'm gonna go over this more on Monday, but just get ready to write it down, okay? My core 10 stocks list. Here we go. Apple, AAPL. Advanced Micro Devices, AMD. Starbucks, SBUX. Philip Morris, PM. Whitehorse Financial, WHF. And by the way, Starbucks, PM, and Whitehorse Financial, WHF, they're all dividend stocks. So those are the 3 dividend stocks, which I like are great. Now to continue, NVIDIA, NVDA, Tesla, TSLA, Chipotle, CMG, Netflix, NFLX, and Palo Alto Networks, PANW. Those are the top 10 stocks. I think those stocks are great. They'll keep you out of trouble. They're all going up. You guys, thank you so much. Send me some questions in the DM if you want. See you back on Monday. Do you have CFA, CAFA? No, I don't have that. If you ask me Monday or send me a DM, I'll pull the stock up for you. Tell you what I think. And thanks for the follow. Coffin. Sandra, you just joined. We're closing now, but I just gave my top 10 stocks list. Come back Monday night. I'll be back. God, out.